Imagine it's October 1929. You're a middle-class banker in New York City. You're smart, you're educated, you understand finance. You have your savings in the safest possible place, your own bank. By 1933, your bank is gone. Your deposits are gone. Your job is gone. 25% unemployment, 90% stock market collapse. 13 million Americans destitute. You did everything right. The system destroyed you anyway. But 200 miles west, in rural Iowa, your cousin didn't even know there was a depression. He owned 40 acres, grew corn, raised chickens, had a dairy cow. He owed nothing to anyone. When banks collapsed, he kept eating. When currencies failed, he kept trading. When unemployment hit 25%, he kept working. Same country, same economy, same catastrophic collapse. Completely different outcomes, because one of you held paper promises. The other held productive assets. Fast forward to today. U.S. national debt, $34 trillion. Interest payments exceed defense spending. Congressional Budget Office projects debt-to-GDP will hit 170% by 2054. The mathematics are identical to 1929. Different year, same pattern, same warning signs. This video isn't about the Great Depression. It's about the 5 asset classes that have survived every monetary collapse in the last 100 years. And why what worked in 1933 is the only thing that will work when it happens again. Let's begin. Number 1. Understanding the pattern. Before we examine which assets survive, you need to understand the mechanism. Most people think economic collapse means total chaos. Mad Max, barter economies, the end of civilization. That's not what happens. What happens is a transfer. Wealth doesn't disappear, it moves. From those holding the wrong assets to those holding the right ones. During the Great Depression, GDP fell 30%. But that doesn't mean 30% of all value vanished. It means value was redistributed. Bank depositors lost everything. But someone bought their foreclosed homes at 10 cents on the dollar. Stock investors were wiped out. But someone bought those stocks and held them until 1954 when the market recovered. Bondholders were paid in devalued dollars. But farmers who owned land outright saw their land values recover completely by 1940. Same economy, same time frame, but completely different outcomes based on one variable. What you owned when the reset began? The Great Depression wasn't random. It followed a pattern. A pattern that had already happened in the Panic of 1873, the Panic of 1893, and the Panic of 1907. And it's a pattern that has repeated since. Argentina 2001, Zimbabwe 2008, Venezuela 2018, and dozens of smaller currency crises across the globe. Every single time, the same asset classes fail, and the same asset classes survive. Here's what survived. Asset 1. Productive farmland owned free and clear. During the Great Depression, farm foreclosures reached historic levels. Between 1930 and 1935, nearly 1 million farms were foreclosed. But here's what the statistics don't show. Which farms failed? Farms that failed had one thing in common: debt. A farmer who borrowed to expand in the 1920s. When crop prices were high found himself trapped. When prices collapsed in the 1930s, his debt stayed fixed. His income collapsed. He couldn't make payments. The bank foreclosed. But the farmer who owned his land outright, who owed nothing to anyone, survived. Not comfortably, not luxuriously, but survived. He couldn't sell his crops for much, but he could eat them. He could feed his family. He could trade with neighbors. When currency becomes unreliable, when banks fail, when paper wealth evaporates, land that produces food becomes the ultimate asset. You can't eat a stock certificate. You can't plant a bond. You can't harvest a savings account. But 40 acres of Iowa farmland kept families alive when everything else failed. Fast forward to today. Farmland has delivered positive returns for 30 consecutive years. While stocks crashed in 2000, 2008, in 2020, farmland kept producing. During the 2008 financial crisis, while the S&P 500 dropped 46%, farmland values increased 17%. Why? Because people still need to eat. Because you can't print more land. Because productive assets survive when paper assets collapse. This is why Bill Gates now owns 242,000 acres. This is why institutional investors are buying farmland at record rates. It's not because they're farming enthusiasts. It's because they've studied the pattern. And the pattern says, when currencies reset, land that produces food survives. Asset 2. Physical gold held outside the banking system. April 5, 1933, President Franklin Roosevelt signed Executive Order 6102. It ordered all American citizens to surrender their gold to the Federal Reserve. The penalty for non-compliance? $10,000 fine or 10 years in prison. The official exchange rate? $20.67 per ounce. 1 year later, the government revalued gold to $35 per ounce. Think about what that means. Citizens who complied, who trusted the government, got $20.67. The government immediately turned around and valued that same gold at $35, a 70% gain. Captured entirely by the state. Transferred entirely from citizens who followed the law. But here's what happened to those who didn't comply. Rural families who kept gold coins hidden. Immigrants who remembered European hyperinflation and buried gold in their backyards. Wealthy families who moved gold to Switzerland before the order. They kept their wealth. Not legally, but practically. When the dollar was devalued, when bank deposits were frozen, when paper currency became suspect, physical gold held its value. Gold didn't save you from poverty, but it preserved purchasing power when nothing else did. Fast forward to today. Central banks globally are buying gold at the fastest pace since 1967. Russia, China, India, Turkey all accumulating gold reserves. Why? Because central banks understand the pattern. When currencies reset, gold is the only asset every government on earth will accept. Not because gold is magical, because gold cannot be printed, because gold has no counterparty risk, because gold is the only money that has survived every currency collapse in 5,000 years of human history. Physical gold, not gold ETFs, not gold certificates. Not gold in a bank vault you can't access. Physical gold you can hold. Physical gold outside the banking system, because when the reset comes, possession is the only thing that matters. Asset 3. Skills that produce essential goods and services. During the Great Depression, doctors and lawyers starved, not because there was no demand for their services, because no one could pay them, but plumbers, electricians, and mechanics thrived. Why? Because when your toilet breaks, you need it fixed whether the stock market is up or down. Because when your car dies, you need it running whether banks are open or closed. Because essential skills produce value that can be traded regardless of currency conditions. A doctor in 1933 might have a wall full of diplomas, but if his patients can't pay in dollars, and he can't accept chickens or vegetables, he starves. A carpenter, on the other hand, could trade a repaired roof for food, for clothing, for whatever he needed. Skills became currency when currency failed. The pattern repeats across every economic collapse. In Venezuela, doctors fled the country, while plumbers and electricians stayed and survived. In Zimbabwe, lawyers lost everything while mechanics who could repair old cars became wealthy. In Argentina, financial advisors were destroyed while construction workers who could build with salvaged materials prospered. The mechanism is simple. Essential skills create value that doesn't depend on paper money. You can inflate away a savings account. You can't inflate away the value of a working toilet. You can devalue a bond. You can't devalue the ability to fix electrical wiring. No. You can freeze a bank account. No. You can't freeze someone's skill set.
Fast forward to today, college debt is at $1.7 trillion. Millions of graduates with credentials but no skills that produce immediate, tangible value. Meanwhile, skilled tradespeople are in critical shortage. Plumbers can command $100 plus per hour. Electricians are booked months in advance. Not because college is worthless, because when systems break, essential skills survive while credentials don't. The question isn't whether you went to college. The question is, can you produce something people need regardless of economic conditions? That's the asset that survives. Asset 4, debt-free property that provides shelter or income. During the Great Depression, millions of Americans lost their homes to foreclosure, but millions of others kept their homes. The difference wasn't income. It was debt. A family that owned their home outright could weather unemployment, could weather crop failures, could weather deflation. They might be poor, but they had a roof. A family with a mortgage even a small mortgage faced a different reality. Deflation meant wages dropped, but mortgage payments stayed fixed. Banks didn't care that you lost your job. They foreclosed. Between 1930 and 1935, over 1 million homes were foreclosed. Not because the homes lost value, because their owners couldn't make payments in a deflationary collapse. Here's the brutal mathematics. If you owe $100,000 on a house and your income drops 50%, you still owe $100,000. But if you own the house free and clear, you can survive on $10 a week if necessary. Same house, same neighborhood, completely different survival outcomes based on one variable: debt. The families that survived the Great Depression did so by owning essentials outright. No mortgage, no car payment, no installment plans. When income dried up, expenses stayed minimal. Fast forward to today. The average American has a 3-year mortgage. Car loans stretch to 84 months. Consumer debt at record highs. The system is designed to keep you paying because a population with debt is a population that cannot walk away, cannot protest, cannot resist, but a population that owns their shelter outright. They have options. The property that survives collapse is property you own, not property the bank owns and lets you use. Not investment properties with mortgage, not leveraged real estate empires. Simple, debt-free property that keeps you housed regardless of what happens to the currency. That's the asset that survives. Asset 5, community networks and mutual aid systems. This is the asset no one talks about because it doesn't appear on any balance sheet. But during the Great Depression, this asset saved more families than anything else. When banks failed, neighbors shared food. When jobs disappeared, communities organized work exchanges. When money became scarce, barter networks emerged. In rural areas, church communities maintained informal insurance systems. If your barn burned down, the community rebuilt it. If your family fell ill, neighbors brought food. These weren't official institutions. They were networks of trust built over years. And when official institutions failed, these networks held. Urban areas saw the same pattern. Ethnic neighborhoods, Italian, Irish, Polish maintained internal credit systems, food co-ops, and shared housing arrangements. When formal systems collapsed, informal systems filled the gap. But these systems only worked if you were part of them before the crisis. You couldn't show up during the Depression and ask for help if you'd never contributed. The families that survived had invested years building relationships, establishing trust, proving reliability. Fast forward to today, how many of your neighbors do you know by name? How many could you call if you needed help? How many would call you? Community isn't a luxury. It's infrastructure. When systems fail, communities with strong networks survive. Communities without them collapse into chaos. This isn't about prepping. This isn't about bunkers. This is about being embedded in a network of people who will help you when institutions can't. Because every historical collapse shows the same pattern. Formal systems fail. Informal systems survive, but only for those who built them in advance. The asset no one values until they need it. And by then, it's too late to build. 5 assets that survived the Great Depression: productive farmland, owned free and clear; physical gold held outside the banking system; essential skills that produce immediate value; debt-free property that provides shelter; community networks built on trust and reciprocity. Notice what's not on this list. Not stocks, not bonds, not savings accounts, not insurance policies, not retirement funds, paper wealth during the Great Depression. Paper wealth transferred from middle-class families to those who held productive assets. The mechanism was mathematical. When dollars became scarce, when deflation took hold, when banks failed, paper promises became worthless, but land still produced food. Gold still held value. Skill still created services. Homes still provided shelter. Communities still supported each other. Fast forward to today. U.S. national debt, $34 trillion and accelerating. Interest payments exceed defense spending. Social Security and Medicare face $170 trillion in unfunded liabilities. Congressional Budget Office projects permanent deficits under all scenarios. These aren't my numbers. These are government publications, official projections. The mathematics are identical to 1929. Different decade, same trajectory, same warning signs. The question is not, whether there will be a reset. History shows resets are inevitable. The question is, where will you be positioned when it happens? Will you hold paper promises or productive assets? Will you owe money on depreciating items or on essentials? Outright. Will you have skills that produce value or credentials that require a functioning economy? Will you be isolated or embedded in a community? These aren't investment questions. These are survival questions, and they can only be answered by studying the pattern. The Great Depression taught us exactly what survives and what fails. The pattern has repeated in Argentina, Zimbabwe, Venezuela, and dozens of other economies. And the pattern is already in motion in the United States. This is historical and educational analysis, not financial advice. Every situation is different. Consult professionals, but understand the mechanism, because once you see the pattern, you cannot unsee it. In 1929, millions of Americans trusted the system. The system destroyed them. In 1933, those who owned productive assets, essential skills, and community networks survived. Same country, same economy, different asset structure, different outcome. History doesn't repeat, but it rhymes. And the rhyme is already audible. If this analysis was valuable, subscribe. This channel exists to study historical patterns before they repeat, to understand mechanisms before they destroy you. Most people will never see this until it's too late. The few who study history have the opportunity to position themselves accordingly, not with fear, not with panic, with clarity. The next video will continue this analysis.